Welcome to Java. Thank you kindly for joining me. It's January 12th, 2024 and Sunday. Got a bit of looking ahead for the markets this week. Hopefully you're having a great weekend so far. And hopefully you've got a little doom and gloom here. Won't damper that. We do have quite a bit more going on in the bond market. Now, it's looking a bit like a pool of gasoline, and there just might be a lit flare heading towards that pool of gasoline. So we've got some warnings flying off with the signals right now. Started last Friday. So let's go a little bit more into this, starting, of course, with our favorite risk indicator is the MMRI. Now, sitting above 324 right now, it's in extreme territory. The two elements that make this up: relative strength of the dollar above 109, crushing other currencies globally at the moment. Now, that does not mean that the dollar is strong. It's just stronger than the others and crushing all these other currencies. Now, this is causing severe global imbalance, not just with currencies, but the trade and everything else that follows suit. Now, the other element to this is the benchmark 10-year yield for United States debt. Now, there's multiple bonds, but the markets, for the most part, look at the 10-year as this benchmark. It's above 4.769 and looks to be heading higher towards 5%. Now, what this means is that debt is selling off at a very rapid rate. The debt market, and I cannot stress this enough, is so much larger than the stock market. And with this fear trade going on of selling off this debt market, causing the yields to spike and causing these major distortions, this is a very serious problem to watch. Now, with this, let's go over to the fear greed meter. It's heading back towards extreme fear, not there quite yet, at 27. So, in most times, one would use this as a signal to buy the dip. However, I do not feel this way. So I have to say at this point in time, this is not financial advice. This is just a show. However, there looks to be quite a bit more to go. The markets now are at levels to where if they break down, they've got quite a bit further to go. They hold here. They need to confirm and set this as a level. There are quite a few head and shoulder patterns, if you are familiar with trading, that are beginning to set up. I do not like a lot of the setups that I'm seeing in multiple markets here. So we've got the S&P. We've also got the NASDAQ looking very, very weak with these head and shoulder patterns. Another one is Bitcoin with cryptocurrencies. Now, if you look at the 4-hour chart with Bitcoin in the futures, you will see different charts with different exchanges in accordance with Coinbase or some of the others. But if you look at them across the board, they look to be setting this up. Now, if this plays out and they break down below the 92,000 level, then it sets up for that drop down to 80,000, possibly lower, as low as 72, but 76 looks like a good strong point. So with this, would take the other cryptocurrencies with this. Now, I want to talk a little bit about bond yields and stocks and why we saw that sell-off on Friday. The bond yields, surge in bond yields, usually, as this says, this is courtesy of Bloomberg, will trigger a stock sell-off. Now, on Friday, this just began. We've got this spike that just happened. You can see what happens typically prior to this. As it spikes, there is a drop, this spike, and it dropped. And now we've got another spike and a crossover happening as we speak. Now, with this being said, this is the underlying for the debt market. I'm sorry, I keep saying that, but I can't stress it enough. It is the debt market. Now, the propaganda going out is, and it is, a lot of the fear greed here is dependent on the Fed rate cuts looking forward. And they're saying Fed rate cuts already over, barely started, as a blowout jobs report shifts the focus to these hikes. jobs report, they're blaming this. Now, in reality, United States lost 87,000 factory jobs. Now, these are real producing jobs in what they're calling otherwise strong labor market. Now, a lot of these strong, quote unquote, strong jobs, many are in public sector, government work, and other areas that are not truly contributing to the GDP in a meaningful way. Again, here, this is another indication. Unexpectedly strong jobs reports send shockwaves through Wall Street, triggering the market sell-off. Now, this was clearly printed by someone that doesn't understand the larger debt market here below. As you can see, again, they missed this from Bloomberg, or they don't understand it. They take something very easily, and they're too readily focused on the stock market. So with this, I'd like to bring something else. There is one outlier in the global markets, and that is China. Now, as we watch this debt market, it is dragging with it globally European markets and then also many of the others. Now, China is different, it's a bit of an outlier. The reason is they're very publicly purchasing their own bonds, and they're saying now that they could halt their bond purchases in order to support their currency because the currency is plummeting. And with this, they're mentioning that Bitcoin's holding under 95,000. So that's, as I said, a little bit irrelevant with that. Now, PBOC on Friday suspended their bond purchases in order to stop their slide in their bond yields. They're moving opposite direction. Just absolutely US dollar and this 10-year yield acting as an absolute wrecking ball. And they are that flare that if they don't stop, this one could hit towards that 5%. That would act as that flare going into that pool of gasoline of debt. Okay, on to lighter things. We've got this is the schedule for the week ahead. Now, really, it's going to be focused on the producer price index, which is coming out on Tuesday morning. Wednesday morning, we get the CPI as well as some retail sales. Thursday morning, bank earnings, looking at inflation and consumer spending. Now, with earnings season, the major reporters, we'll talk about this in a moment, are the banks. Be looking at those. And a little bit forward, industrial production. They're looking at it rebounding. Now, I would say that it would rebound because it's been a very terrible road lately. Not much direction to go but up. So with this, let's take a look at the calendar. And this is what we're looking forward with this week. You can see it really starts on Wednesday with not just Citi but BlackRock, Wells Fargo, Goldman Sachs, BNY. So it's going to be a huge week that starts kicking this off. We'll watch these going on. Regions, more banks. So with this, couple of other things I would like to bring up, and this is that the back to the Bitcoin thing. US DOJ was approved to sell 69,370 Bitcoin that they had seized. Now, the flip side of this is that spot Bitcoin ETFs acquired in that same period of time 51,500 just in December. So this is nearly 4 times what gets mined in that month of 13,850. So if you look at the reality of the stories, they're putting this out in order to shake the markets, to brush out the weak hands. There are better prices coming. Silver is also in an interesting position to where they are manipulating the asset itself. Now, all of this happening, as this says, interesting situation. This is less than 2 weeks away from the new administration that vowed not to sell the Bitcoin. So, with this, it did affect the price a bit. However, I think people are getting onto their games because it didn't affect it that much. We'll see what happens this week. Now, with this, another thing that I had mentioned, the large stories about Denmark. So it's coming out, always comes out to light. And I had mentioned the strategic position. Now it's open. They're open to boosting United States military presence in Greenland, and also that the United States pressured Greenland rare earths developer not to sell to China. So your two real reasons have just come out to the light, as I said they always do. So with this, I'll probably bring a couple of these up in the morning, as this is getting out late Sunday, and I know that some people are going to miss this, so I'll just kind of glance over this, but I will go over what's happening in London. We're going to watch what happens overnight, not just in the Asian, then the European markets, as well as pre-market tomorrow. So I'll bring you that news in the morning. So until I see you again, enjoy the rest of your weekend, and my friends, until I see you again, stay free.